Good day, this is Prieur checking in from Cape Town. Or should I rather say sunny Cape Town, where the summer tourists have started arriving and the holiday vibe is really taking over. Today I'd like to focus on the Chinese stock market. Now, given concerns about the growth prospects of the Chinese economy and the potential for a hard landing for the property market, we've seen Chinese stocks declining to multi-year lows. Now, this is illustrated by the chart of the weekly performance of the Shanghai Composite Index, and we can see that since the April highs, the index has declined by some 27%, and it's now within reach of the 2008-2009 lows. Also note the underperformance against the Dow Jones World Index and really against most other major indices. We can see this from the declining relative strength chart in the bottom section. However, there is a ray of light. After a series of 6 consecutive lower lows, the Shanghai Composite formed a so-called upside key day reversal on Friday. An upside key day reversal refers to a 2-bar technical pattern where the second bar makes a new intraday low but closes above the high of the previous day, in this case above Thursday's high. This heralds the prospect of at least a near-term rally, but in order to be of any significance, the index needs to push back above its 50-day moving average, which is at the level of 2,400, compared with the current index value of 2225. And then also needs to better the November high, which comes in at 2,530, and eventually challenge the 200-day moving average, which sits at 2,667. There's also some hope on the fundamental front. This chart comes courtesy of US global funds, and it shows how Chinese stocks in the MSCI China Index, in other words, Chinese stocks in Hong Kong and domestic B shares, rise and fall along with China's M2 money supply. The money supply line is the yellow line. Now, given the decline in the latest Chinese PMI data, I will not be surprised if the Central Bank of China, the so-called People's Bank of China, soon unveils a new economic stimulus program to boost specifically domestic demand. I believe this should see a reversal of the declining trend in the M2 and hopefully create a tailwind for Chinese equities. And with that, I'd like to wish everybody happy and safe holidays. Until next time, this is the way it looks from Cape Town.